Quasar, solving America's problems. We are doing a collaboration. Hope everyone's doing remarkable. Jeremy Newsom with my co-host, Dave DC Conley. We're going to talk about markets, politics, news, headlines, what you should know about, what's moving, and what you should keep an eye on.
Yeah.
CPI came out hot.
Hot.
Yeah.
Yeah, but
May CPI is
4.2.
First 4%. Yeah, 4.2 print since April 2023, which was expected. Now, one of the interesting things I saw or heard Kevin do, I'm just going to call him Kevin, the new Fed chair, is he's working on taking inflation and changing it
show,
so that... Yeah, good old Kev.
Friend of the show. Yeah, all right. What is he doing?
He's changing the way that inflation is actually measured. So he's not.
Wait. let's peel that a little bit apart because I'm your political side, right? Peel it apart. We're changing it.
No, this is it.
Oh, it'll look so much better when we change the numbers on the spreadsheet, not the, Hey, this 4.2, I know you're feeling it at the pocketbook. I know you're feeling it at the grocery store. I know you're feeling it when you pump your tank. But you know what? You should feel better because it's actually 2%.
That's what he's trying to do.
Oh, come on. All right. All right. You give me your take on it. All right. So he's changing the calculation. What's he doing with the calculation?
It's a tough take. It's a tough take for me to justify, but he's using an outlier method where if the price of something hasn't been X for more than Y period of time, then it's an outlier. So he's using just the median bell curve, essentially, right? Like the 90% of the data, the 90% of the price, those are like the core CPI. Because right now, you ready for this? Right now, we're in an outlier time period. So the prices of things.
Oh, come on. No. Let's
doesn't count. No, it doesn't count, Dave.
All right. Our Quasar friends out there, this is your politician side. Let me put my politician side on. It's like we all can smell the bullshit. And you're going to hear this term a lot, and you're going to hear it all over CNBC. You're going to see it on your X feeds. You're going to see it on, Instagram, whatever. You're going to come. It's going to come out of their mouths, and the word is transitory. And that is their way of saying, hey, this is just a temporary thing. Now, the problem with inflation, there's lots of problems with inflation. There's no good news on inflation, is that it's additive. So this 4.2 means that next month, 4.2, guess what? That's 8. And we're seeing it. We're seeing the reality of it. Until you have deflation, which, the economists are like, oh, that's bad. It's like, I would die for some deflation. So, it also represents what they're willing to do and what they're not willing to do at the Fed. So of course, they're changing the calculation. They're not changing the policy. That's what it is. All right, whatever. Yeah. Transitory.
That's the big one.
Yeah, transitory means that, I don't know, the vampires are coming out from Transylvania, I think. Transitory. Right. So there's nothing transitory. The things that are not happening are Straits of Hormuz and this energy shock and all of this. It's a giant tsunami. It's cruising around the globe. You can't take 20% off of energy and be like, no problem. You hear it from the farmers, you hear it from the people, you hear it, it's oil's in friggin' everything. So you take 20% off, it smashes into Asia, it smashes into Europe, and it's smashing into us. We're seeing it, right? It's like it's no kidding. It's inflation. Yep. So this disjointedness of the markets of just being like, oh, everything's fine. Is I am praying for $200 a barrel oil, because that's, I don't think the political class, this Epstein class, the Europeans being like, oh, everything's fine. I do not think it's going to register with anybody until there's enough people out on the street saying, hey, this isn't good. We can't have $8, a gallon. And they're not even talking about suspending the taxes. Oh God, the feds and Florida and all the states can be like, okay, no more taxes on fuel until this is all resolved. They're not doing it. All right.
Yeah.
Rant done.
Not totally quite. Because here's the other cool part is we
Oh, and there's more.
and there's more. So silver and gold, which everyone's like, oh, they're going to be just fine. It's not a big deal. Like it's all okay. They're starting to break some very, very, very key levels. So I was kind of giving some people some warnings around here time frame, and I'll talk about why. That was around like $71 an ounce, give or take. And if I just zoom out to a weekly chart, when I was really analyzing this and kind of just looking at it, this is what I was noticing, or at least to me. So that looks like, from a technical standpoint, a perfect double top, close with a neckline, and a little bit of a retest. And so I was like, all right, guys, let's just be really cautious. This is back in April, and it is starting to play out. And so the play out is essentially, and realistically, like silver and gold just kind of starting to drop, which was everyone's like safe haven for a while.
Yeah.
Gold is already starting to kind of get torched. And this is just kind of what has to happen when you have one of the largest assets on Earth. So if I zoom out, right, one of the largest assets on Earth went from $1,700 an ounce to almost $5,000 an ounce in 2 years. So that's almost, let's call it a 200% return. Yeah. Crazy town. And so now you have a weekly double top. I do think that gold and silver will kind of continue to go lower. The oil thing, so here's the energy ETF. And to your point, nothing has been resolved. And we've kind of been saying that for a while, that it probably won't. And if I'm looking at just the energy ETF, so the XLE is an ETF that comprises different stocks, different energy components as well, other ETFs, other companies. And this is the weekly chart. So you have what's very ironically been a huge compression since March. And that compression is going to lead to a really, really big move up or down. And I don't know what direction.
Let me tell you what direction.
So, yeah, Dave's on the side that this is going to break higher. And it makes sense to me. It does. It makes sense to me. Because again, with higher gas prices and supply going down, companies are able to charge more. And if they're charging more, they're going to make more profit, generally speaking. So this should resolve to the upside most likely. And then you have the broader markets, which is the QQQ. So we had a really large spike yesterday. So this is something that Dave and I literally started speaking about over here, is that we needed a 4 to 6% drop very, very soon. And the broader market index fell 8% quietly. Well, no one's really talking about it over the last week. It's kind of a big drop. All right. That is a big little pullback. That is a decent little correction. And that is because of the SpaceX IPO, right? So a lot of companies, a lot of funds are selling to get some capital, right? There's a SPY drop on almost 5%. They're selling to get capital so that they can go buy SpaceX because their customers are requiring it to, but also they need to be putting it into funds. They need to be putting it to, so this is some liquidity coming out of the market.
Can I ask about that?
Yeah, please.
This is, out of my wheelhouse, which I'm asking you. My understanding is because of the size, or however they say, what SpaceX is as an asset class in the world, is that it's immediately going to have to be bought by all the institutional investors to put into 401ks and not IPOs, but into all investment vehicles for retirement. Is that I don't know.
Yeah.
Did I use the right words?
The terminology was perfect. And it is coming in at the largest IPO in human history. And by human history, I mean forever. Because it's coming in at 1.7 trillion, which is 1,700 billions on day one.
Okay. When we started talking about like trillions of dollars for like the Defense Department, because of course they need money, hear my irony. I was like, okay, how much is $1 trillion? And it was like, okay, like $1 million you can fit in a suitcase, and like $1 billion would fit in like a living room of $100 bills, right? And then it was $100 billion was like a house. And then $1 trillion is a 12-story building of $100 bills. A 12-story building.
Skyscraper. Yeah, skyscraper. And SpaceX is about to come out worth 2 of those. So it's
24 stories.
Yeah, where Dave is living, right? Because he's obviously in a penthouse.
No. I'm on 14. I'm on $1 billion, right? I'm on $1 billion.
You're on $1.2 trillion. I love it. Which is actually, that's probably where SpaceX, ironically enough, will actually settle down. So, after a 30% pullback, which is almost inevitable, you're going to see a crazy height. You're going to have a nice little push, 10, 15, 20%. Everyone's going to like, see, I told you, probably right before 2 trillion, if I had to guess. Maybe a smidge over. And that's when the hype is going to be at its utmost, and we're going to get a nice little selling. And I think that selling is going to also kind of carry over to the broader markets. But in general, to me, it still feels buyable. The trends, the charts, everything looks and feels buyable. And I'm fine with picking up some dips and allowing the market to kind of come in a little bit, kind of rest, kind of cool off after this really, really, really strong move. And again, probably slowly keep climbing higher until the next big thing, whatever that's going to be. I don't know. But
I wonder, because it's also going to mint the largest number of billionaires, millionaires in history all at once. And those are the people who are working at SpaceX. And I know at AOL, we were the fastest growing stock in the Dow at that point in history. I'm sure it's been totally eclipsed in the last 20 years, just probably by NVIDIA. And we had a huge brain drain when the last of the option sets, the big option sets of the early employees vested. And I'd be kind of curious, like, what's their vest schedule, and what kind of brain drain? I mean, how many rocket engineers are minted every year? So I don't know. It was a thing at AOL, and it was a significant decline because a lot of people were like, I'm wealthy, thank you.
I'm out.
Peace out, baby. I'm coming to Miami to buy one of these, or an island, right?
Sure.
Yeah, so that's something I would look at.
That's a really good point. I mean, the lockup period on most IPOs generally is around a year. So that's when early employees or early investors they can start getting out. Now, the people that are going to get out within like a couple of days or weeks are obviously the banks. The
first in line.
Yeah, the private equities, the venture capitals, they're going to sell to the people, the humans that want to buy it. Those are called exit liquidity. So the rich people that need to get out, they need buyers. So they get on the media and they tell everyone it's going to go higher and all the things. And
which, over the long term, I mean, look, if you invested in Tesla when it first came out, you made bank, right?
Yeah,
so if you're a buy and holdish kind of person, if you're if you're a day or a leap trader here, it's like there's money to be had, right? But there's not money to be had buying and selling in the short term unless you're doing the strategies that we talk about here.
Yeah.
So, all right.
Yeah.
What else are you looking at?
What else am I looking at? Well, does
anybody talk about anything other than chip stocks? I mean, like what is beyond the chip stock? Because
are there anything else?
Politically, I mean, that's what's holding up the market. That's where all the attention is. I was about to say Sam Bankman-Fried, but that was the crypto guy, right?
Yeah.
Sam Altman, the one in jail, but the other one that might be in jail in the future, was tooling around Capitol Hill and saying, hey, the U.S. government should, get a big pile of these stock options. Bernie Sanders came out, said the same thing. It's like but he said it in the sense of like having this sovereign wealth fund of these AI guys. You and I have been talking about a lot of AI in our world, of Solving America's Problems podcast. With a lot of deep thinkers, and I'm not against the idea because we know that change is afoot. We don't know how big this change is. We know it's going to affect people. We just don't know. And so like having money set aside to be like, okay, we do have to pay for the retooling of the American dream, but I don't know. The cynical guys are coming out and being like, well, yeah, he wants to hand over stock because he doesn't want any regulation. I think it's a little dark, but
Slightly dark, but not off.
Yeah. So does anybody talk about anything but the AI and chip stocks, or no?
No, not really. Unfortunately. But here's the good news. Again, some of the companies that I do think are going to be the sleepers are retail or big box stores potentially that are going to use AI to become more efficient and lower just general overhead. So think about Walmart, Costco, TJ Maxx, Burlington Coat Factories, Target, right? These companies, I mean, the stocks of these companies are doing remarkable. So a lot of people aren't totally discussing them, but I will say that that's something that's absolutely on my radar. So for example, just check out TJ Maxx. Like, look at this, just scorching.
Well, these are also stocks that in a, we call it the K-shaped economy. I think that, that's a it's actually tough for me to wrap my head around. But, most of the people in the United States, the bottom 90% are struggling. And so like there's downshifting. So instead of going to a Disneyland or, going and visiting grandma, and taking planes, you're going into RVs and then the RV folks are going into tents and in beaches and local vacations. So that's just downshifting as things get more expensive. So same thing happens with retail, right? If you're shopping at a Nordstrom's or you're shopping at your mall, you're going to downshift into lower prices. TJ Maxx is going to be one of them. Target's going to be one of them. So when you get these CPI things, like that's what you're going to see price action on finance.
Yeah, makes perfect sense.
So TJ Maxx, where else are you?
Yeah, I mean, Dollar Tree, Dollar General, right? It's like if we're coming into this economy where people are getting squeezed a little bit, go look at some of just the discount brokers, the discount companies, the discount stores, Five Below. I mean, look at this.
Wow.
Scorcher, right? Just hit an all-time high at 250. So again, think about, to your point, where like everyone's talking about chips. Yes, and if you get the opportunity to do some research, to think and grow rich, to really dive deep into how AI can help certain companies, that sovereign wealth fund to me is almost like, and again, I've been playing with this idea essentially is if you make over a certain amount of money, then any amount of money that you put into a thing, you're just not taxed on at all. And that thing that you're putting into is the sovereign fund of making all this money that you're making as the CEOs and the owners of these companies from the AI perspective. It's like you're becoming a lot more profitable with having less workers. Yeah. And as a result of using that technology, you don't have to pay any taxes over $1 billion. And for every 10 cents that you make over $1 billion, you got to put into this wealth fund. And that wealth fund is the UBI, the starting concept of that. Because again, I do ultimately think at some stage that there's going to be a big push for that. And I also think the person that solves where the money comes from and how it happens in a place where it doesn't feel like an extreme strain on everyone that's involved probably starts to win that race a little bit.
I agree.
Yeah. So for our listeners out there, it's going to be still an incredible market to not only actively trade. When I pop on with Big Beat, he calls out trades that him and I can take pretty actively and pretty aggressively just from our laptops. And if you're capturing just as a day trader, 2 to 3 points a day on a couple thousand shares, and you can create an awesome income for your family. That is something that's very, very obtainable for every single person listening. That's why I love the markets. Markets don't care about your religion, your background, your political views, what you've gone through, what you haven't gone through yet. They will, and the markets will either make you more money or take some of your money and give it to someone else who's more disciplined and more patient. That being stated, it's been an honor to be here with you, to talk CPI, to talk SpaceX once again, to talk oil, to talk gold and silver, look at some charts. We'll be back Thursday with a Big Beat, and we'll see you all next week as we continue to create awesome content for solving America's problems, really dive into the root cause of some of these issues and create some amazing, tangible, useful solutions right now.